What's going on, beautiful people? It's Joe, aka the Nomad Investor, where dividends freedom anywhere is the goal. And today we are back with another portfolio update. Now, I am a little bit under the weather, but the videos are continuing, and I will continue to document my journey and grow my portfolio. So without further ado, let's dive right in. Currently, we are at 1,056 subscribers. 57 subscribers. You guys are seeing this live with me. And we have 43 videos on the channel. I am filming the 44th video on this channel and the 42nd portfolio update. So if you are new here and you haven't already, please smash that subscribe button. It helps keep me motivated to continue making these videos and documenting my journey. And for everyone else, make sure to smash that like button. It helps with the YouTube algorithm and for growing this channel. As always, the videos on this channel are for informational, entertainment, and educational purposes only. I am not a financial professional or advisor, and nothing here should be taken as financial, investment, or tax advice. Investing always carries risk, and those seeking financial advice should seek out a registered professional. Now, if you are not new here, you can skip over this. But if you need a refresher or you're new here, this is my game plan and goal for growing my small portfolio from $0 to $1,000 per month in dividend income. I have two sources of income. One is remote work income, and the other is business income. My remote work income, pretty stable, pretty consistent, pretty reliable. And my business income, it's kind of fluctuates up and down depending on the seasonality of things, but for the most part, it's growing every single day, which I love to see. And I have committed to contributing anywhere from $300 all the way to $1,000 plus per month into my Robinhood taxable brokerage. And my goal is to treat this brokerage like a business, aiming for 30% plus high yield annually. And I aim to achieve this through investing into things like high yield income ETFs and stable income ETFs. They are funds like, but not limited to, KQQQ, QDTE, BLOX, HOOW, Chippy, and more. Now, I am still always looking for other opportunities, other ETFs that could help bring me exposure to other specific niches or industries. So if you guys have any suggestions, drop them down below. But I had set originally a max of 5 to 7 positions. I think I'm pretty much going to stick with that. However, I'm going to only allow that to contribute to weekly pay ETFs, not any of my monthly pay ETFs that I acquire or any growth stocks that I purchase in the future should I ever do. So I just wanted to clarify that. But I will be alternating between anchors and satellite ETFs. This is following the core satellite investing strategy, investing approach. You guys can do your own research on this. And I will be I'll be reinvesting the weekly and monthly dividends back into my positions, but I will be doing a manual drip versus an automatic drip process. So instead of me automatically having it do market orders, I'm going to be stacking the dividends to purchase whenever the market is down, like right now. Now, you could set an automatic drip on when the market is down, especially if it's significantly below your average cost per share. But I have noticed in the past when it's a little bit below my average cost per share, but not by much, sometimes the orders actually fill above my average cost, and I don't like that, so that's why I've switched to a manual drip process. With that being said, drip plus always compounding is the overall portfolio growth strategy. And basically, I will be rinse and repeating this until my account hits $1,000 a month in dividend income. Now, again, disclaimer, none of this is financial advice. This is strictly for entertainment purposes only. I am some random dude on the internet, random dude on YouTube, so you should never follow me, copy me, or seek me for advice. I'm strictly just documenting my journey to achieve my goal and inviting you guys to join along by subscribing and watching my videos. Next, I wanted to share my dividend income milestones while I grow my small portfolio. This is basically so I can celebrate the small wins leading up to the bigger goal along the way. For this month, so far, I have achieved the first and second goal, although I did reset my portfolio recently if you guys have been watching the channel for quite some time. But if you haven't, that's what's been going on. Probably next month, I don't think I will achieve any of these goals, to be honest. Now, I could be wrong. We'll see. If we get there, that would be awesome, but I'm not going to force it, and I'm not going to get into bad positions that are going to leave me in a bad spot. So with that being said, these are all the milestones that you guys can pause this and check out leading up to the big goal. Now, hopping over into the portfolio, this is where we are currently sitting at pre-market on Monday, the 24th. We are at $5,526.46. I am sitting on $3,890.71 in cash and $7,610.50 in margin available. However, I have not used a single dollar margin yet. To be determined if I will use that in the future or not. As of right now, I am currently strategically investing back into positions that I personally believe in, have high convictions in, especially when it comes to their underlyings, but I'll explain that in a bit. Now let's dive into each position. So first we have KQQQ. It's currently sitting at $28.13 a share. My market value is $421.91. I am down $4.54 or negative 1.06%. I actually probably will be buying more shares today, to be honest. My average cost per share is $28.43. I have 15 shares with a portfolio diversity on Robinhood of 25.79% and a maintenance ratio of 25%. So like I mentioned, I will probably be buying some more since it's below my average cost per share. And I want to grow this position as it is one of my core anchors in my portfolio. Next, we have Chippy, which is currently at $53.70 a share. My market value is $375.90. I am down $2.88 or negative 0.76%. My average cost per share is $54.11. I have 7 shares with a portfolio diversity of 22.98% and a maintenance ratio of 25%. Next, we have QDTE. It's currently sitting at $34. My market value is $238. I'm down 50 cents or negative 0.21%. My average cost per share is $34.07. I have 7 shares with a portfolio diversity of 14.55% and 25% maintenance ratio. So I will also be investing back into this. This is another one of my core ETFs. Next, we have GOOW from Round Hill. It's the Google weekly pay ETF. It's at $72.70 a share. My market value is $145.40. I am up $2.80 or 1.96%. My average cost per share is $71.30. I have 2 shares with a portfolio diversity of 8.89% and a 30% maintenance ratio. Now, this is a position I would love to keep growing. I'm going to see how it performs today, but it's currently above my average cost per share, so I'm not sure if I want to buy in just yet. Next, we have NVDW. It's currently sitting at $42.54 a share. My market value is $127.62. I am down 0.90 cents or negative 0.70%. My average cost per share is $42.84. I have 3 shares with a portfolio diversity of 7.80% and a maintenance ratio of 30%. Next, we have BLOX. BLOX is probably my worst performer as of right now, obviously due to the crypto situation, but I have been giving this another chance because it is in a great spot to accumulate. And I plan on keeping this position at a 10% exposure just because it's crypto focused and I don't want to be heavily overexposed in crypto on my portfolio, but I still would love to benefit from the weekly pay from Nicholas Funds or X Funds. So anyways, it's currently sitting at $17.39 a share. My market value is $121.75. I am down $11.70 or negative 8.77%. My average cost per share is $19.06. I have 7 shares with a portfolio diversity of 7.44% and a maintenance ratio of 25%. Next is PLTW, which is currently sitting at $34.79 a share. My market value is $104.37. I am up 12 cents or 0.12%, and my average cost per share is $34.75. I have 3 shares with a portfolio diversity of 6.38% and a 40% maintenance ratio. So if ever I do decide to use margin, I'm going to be very conscientious of this 40% because that's quite significant. And last but not least, we have my favorite position of all time, HOW. It's currently at $50.40 a share. My market value is only $100.80. I am up $2.58 or 2.63%. My average cost per share is $49.11. I have 2 shares with a portfolio diversity of 6.16% and a maintenance ratio of 30%. Probably in the near future, I would love to add some of the actual shares to this portfolio just to kind of have it and see how it grows. It would be strictly growth, obviously, no income from that, but this is something that I personally love, this position. Moving on, I wanted to dive into the dividend sheet. I typically like to kind of go over my market return and total return, so let's quickly cover that. This data is 20 minutes delayed, and most importantly, it only pulls from the market close. Now, that doesn't include any after hours numbers, so just keep that in mind, all right, guys? So currently, for total return, we are at negative 9.91% for BLOX. We are up 0.20% for HOW. We are down negative 1.19% for NVDW. We are down 0.55% for PLTW. We are down 0.63% for GOOW. We are down 1.70% for Chippy. We are down 0.41% for QDTE. And we are down 1.09% for KQQQ. Now, for market return, we are down 10.60% for BLOX, up 0.20% for HOW, negative 1.19% for NVDW, negative 0.55% for PLTW, negative 0.63% for GOW, and negative 2.25% for Chippy, negative 0.88% for QDTE, and last, negative 1.09% for KQQQ. So overall, it shows that we're down here, but if we hop back into Robinhood real quick, as you can see, I have HOW in the green, PLTW in the green, and GOOW in the green. So those are my 3 positions that are actually in the positive as of right now. The rest are obviously in the negative for now, but it's such small percentages, it doesn't really matter. Let's hop into the dividend logs. So I've already entered this, and if you guys have watched my video on Saturday morning, then you guys can see what my total is. But for the sake of this video, we are currently sitting at $257.20 in dividends received this month. And for the year, we are sitting at $573.51 in dividends received. So that's looking pretty good. And then if we hop over here, I've already added the BLOX distribution. I added the number of shares that I have and the distribution rate that we had as well. So that's why we have the 92 cents in dividends received so far this week. But we have quite a few positions that we're going to get paid out for. So such as QDTE, SPYI, GOW, NVDW, PLTW, and HOOW. So we have quite a few that we're going to receive, and then I'll tell you what my total is. The goal is to beat last week's distribution, which was $3.21. I think we could do it easily, so we'll see. And then lastly, this is my goal and how far we are off from achieving that goal based on this month's income. So I am about $742.80 away from achieving my personal goal of $1,000 in dividends being paid out. Now, I was a lot closer before, and I probably would have been almost halfway there, if not a little over halfway. But because I started my portfolio over, which I'm totally glad I did, by the way, I would have been way closer before. But now we'll see. So next month will be a lot more realistic of what the numbers would look like than this month. Now, hopping over into the contribution calculator, as I like to call it. This is something I quickly created. That way I can kind of get an idea of what my current allocations are. And as you can see, these are my current allocations for each position, and these are my target allocations for each position. So I'm just going to quickly cover this. For BLOX, we are 7.83% away from achieving our target allocation. For HOW, we are 8.21% away. We are 7.69% away for NVDW. We are 8.12% away from PLTW. We are 7.43% away from GOW. We are 23.28% for SPYI. We are negative 15.71% away for QDTE, and we are 2.34% away from KQQQ. And that's just, again, for the target allocations that I want for each position. As you can see, for positions like GOW, PLTW, NVDW, HOW, and BLOX, I have capped these all at 10% allocations. Basically, what's really cool about this contribution calculator is I just enter the amount in here, and then it'll automatically calculate the breakdown of the amounts per position based on my allocation. But these are my target shares that I want to achieve and the gap that I have from achieving that. I want 30 shares, and I am 23 shares away for BLOX. I am 8 shares away for HOW. I am 9 shares away for NVDW. I am 12 shares away for PLTW. I am 10 shares away for GOW. I am 24 shares away for SPYI. I am 25 shares away from QDTE. And I am 4 shares away from KQQQ. So probably today I might just end up buying these 4 shares, but we shall see. And then, yeah, I mean, BLOX, we're quite a ways from ever achieving this 30 shares goal, but I may purchase some today. It is down. I think it's going to continue dipping just because of the way crypto and specifically Bitcoin is going. And real quick, I did want to break this down. A lot of people ask me, why did I end up getting half of the positions, half of the holdings of WPay individually versus just investing into WPay? Now, WPay is not a bad position. The big issue or problem that I have with it currently is that it holds a lot of positions that I personally do not like. They've also added some other positions that I'm not sure how it's going to impact it. It may change my overall sentiment on whether or not to reinvest back into WPay at some point. But as of right now, I don't really want to hold it. Also, I prefer the income that I could get individually from these positions. And as I've kind of shared before, I'm pretty bullish on the underlyings for each of these positions here: Google, Palantir, NVIDIA, and Robinhood. I don't really want to get exposure to, for instance, COIW. I don't like MSTW, so strategy. I don't really want to be in that position. I don't want to be in Uber or UBEW. So that is exactly why I made my choice. But without further ado, let's dive right into X. So this is my X account. For those of you who don't know, my goal is to achieve 50 followers by the end of this month. We are currently at 44 followers. So if you guys could follow me on X, that would be much appreciated. I post live updates when I buy things, when I sell things, my opinion on things. Sometimes I might share some funny stuff regarding the markets. I don't really do anything outside of that. I just want to keep it really focused. So if you guys want, you can follow me at I'm Nomad Investor. That's at I'm Nomad Investor. Hopping into this first post, this is from High Yield Hustle. He's quoting this original post, so let's first read this. It says, the high yield pullback playbook. What smart income investors do now. The buy checklist, what not to do in a drawdown, underlyings pulling back versus NAV erosion, and how these funds behave in down markets. Let's break it down how to navigate this. So I thought this was really good because this shares a little bit of why I've been doing the things that I've been doing, why I've been investing into the funds that I'm investing in. And again, this is just something that I'm learning about. I'm completely new to this whole high yield dividend income investing journey, let alone any dividend income, investing as a whole. I have retirement accounts. They're completely managed by my financial advisor. I don't touch them at all. I just invest passively every single month into those funds. I don't even know how much they're currently sitting at, to be honest. But for this is completely new to me. This is why I am doing things and documenting my journey. You guys get to see my successes and my failures, my smart choices and my terrible choices. So the first key is to identify which funds will get you upside when the market decides to move higher. This is why understanding strategy is key. You want to maximize compounding by achieving capital gains and yield. Once you've identified those funds, you want to mark off your DCA levels as support on the underlying. I already have mapped out what funds I want at what levels in case we do in fact head lower. Just because we are pulling back doesn't mean you want to hammer the buy button on every fund. You need to scale in your buys. This is exactly why I'm not aping in, as we call it in the crypto space, into any of my positions. I'm slowly buying amounts when they are below my average cost per share. I personally feel like we're still going to see more of a pullback, more of a dip, but we'll see what happens in the markets, right? A very big misconception I see is people expecting these funds not to draw down as if they are some sort of inverse fund. Unless it is a true inverse, you are bullish and long the underlying. So the next thing you want to do is identify is if a fund is eroding or simply pulling back. Viewing price change will tell a lot of that story. Did the fund go down in a bull market? That's your major red flag. Has it shown ability to recover from pullbacks? If yes, that's where you want to add on pullbacks. You don't want all your upside cap on a reversal. Price change tells all. Peep the chart to peak and tell me where you'd allocate. The answer should be clear. So what should you not do in a pullback? Number one, prioritize yield over upside. Use all your dry powder ASAP. Panic sale. So I am to blame for doing the panic sale. I'm not gonna lie, guys. It is what it is. What's the alternative? Combine yield plus upside. Hold and harvest. DCA at key levels and scale in. You also don't need to buy everything. Hone in on your highest conviction funds. Instead of moonshots, look for quality underlyings. Stay patient and flip the mentality. Here's examples of funds from the April low to the peak. Panic would have led to missing out on incredible gains. So I'm not gonna lie, guys, this is the one that I'm still working on. I love a lot of funds and I just have to kind of narrow it down. I feel like what I have now is pretty good, but who knows? I'm not gonna lie, this is very tough for me. I have such limited funds in this position, so I can't invest into everything that I want. Let's see, take a look. So it says PLTW, NVDW, HOW, GPTY, Chippy, BTCI, QQQI, and SPYI. So I actually have quite a few of these. I have this one, this one, this one, this one, and yeah, that's about it. I don't hold BTCI, although that's a very interesting fund from Neos. QQQI is also interesting, and then SPYI as well. To navigate a pullback, stay patient, scale in intelligently, and combine upside and yield. Flip your mentality so that when the charts flip, your gains are maximized. I mean, honestly, I'm bullish on these three right here. Chippy is a new one for me. I just liked how it's performed overall, and I think it will continue to perform pretty well. So we'll see. And then I announced this last video. I'm currently looking for an S&P 500 fund. I preferably want a weekly payer. I have looked into XDTE again. That's something that I held earlier on, but I don't really know if I want it yet. But I'm also looking into SPI and a few other ones. So if you guys have any suggestions for S&P 500 index or weekly pay ETFs, drop them down below. I'd love to learn a little bit more about them, do some research, and then maybe I'll even make a video about it. Who knows? I did forget to mention, so this is the original response. It says, we are getting some signs of stability, but I definitely do not think we are out of the woods just yet. It's important to have a plan in place for pullbacks instead of just throwing money left and right. Hone in on the best underlyings, funds with upside, and scale in your buys. Your future self will thank you for patience. So that is in response to this original post that we read from High Yield Hustle. Next, we have a post from StockTwits. It says data center stocks are showing some life in the overnight market as both NBIS, Nebius Group, and Iron Limited are up over 3.5%. So this is really important for AI as a whole because data centers are the key, because without data centers, without these servers, these other companies can't host their AI, their proprietary IP AI on there, okay? So that's just something to keep in mind. This could be a sign of AI companies moving back towards the upside and basically doing a reversal and going back into a bullish pattern. But I don't know yet. We shall see. This is just something to keep in mind. This is not financial advice. This is not predicting market. I have no idea where it's headed. This is a really cool post that I actually like, and ironically enough, I didn't realize it now, but these are 3 positions that were in that other post from High Yield Hustle. But this is from Top Dividend ETFs. It says the perfect 3 high income ETF portfolio: QQQI, BTCI, and SPYI. Thoughts on this? So it's obviously showing these funds from NEOS, and as you can see, NEOS is probably the best, I think, high yield income ETF funds. Now they only pay monthly, and that's kind of the kicker here. And they usually pay a lot less in dividend. I would argue and say a lot healthier of a dividend than some of these other funds that I personally invested into. But I like what they're doing. They have a strong history and they have yet to fail their investors. I think this could be a nice portfolio for me personally if I was strictly invested into monthly payers. Who knows? Maybe in the future I will add 1 or 2 of these positions to the portfolio. I'm not talking about BTCI, but I am looking at QQQI and SPYI. Now, maybe QQQI I won't do because I do have KQQQ, but SPYI could be one, as I've mentioned previously. Next, we have another one from High Yield Hustle. It says 12% versus 4% withdrawal rate seems like an easy choice to me. So let's take a look at the original post so we can understand what he's referring to. So it says $1 million invested in the 4% rule is $40,000 per year in the trash. I think he's saying in the trash because you are basically selling off 4% of your portfolio, so you're losing that money. He said, what if you parked that in SPYI? 2022, $37,675, only 4 payments. For 2023, $115,977. 2024, $122,608. And 2025, $102,055 year to date. But your capital has to erode, right? Nope. If you withdrew all your dividends, your capital would be up by $30,100. That is pretty cool to see. So that is something that is to keep in mind. There's the traditional fire out, which is the 4% rule, which is you sell off 4% of your portfolio and you use that money to live off of. However, there is also these new high yield income ETFs. Now, out of all these, I think the ones that have been the most consistent from what as far as I can tell, and again, I am a noob here. I am new to this. I'm a beginner. But as far as I can tell, NEOS has performed the best. Other funds to be determined. Yield Max, definitely not. But yeah, this is really interesting to see. And I kind of like this strategy more than the 4% rule personally, but I'm not opposed. You know, I have my traditional investments and I have this non-traditional investment, this high yield weekly pay ETFs that I'm doing. So we'll see which one performs better. Now hopping into Yahoo Finance, we got some news. So if you guys didn't know this already, and I know I'm talking about this a little bit late, but Tim Cook, the CEO of Apple, is actually stepping down. And it says Apple's successor to CEO Tim Cook has big shoes to fill. And then it says, NVIDIA didn't rescue stocks. What's next for the AI trade? And then last, it says Alibaba gains as rival to ChatGPT makes strong debut. So we've got some interesting titles here, some interesting headlines, but moving on into the futures because that's what we want to pay attention to today. The S&P 500 is sitting at 0.65% up. The Dow is up 0.30%. The NASDAQ is up 0.93%. The Russell is up 0.48%. The VIX is down 11.40%. It's around 23.41 right now. And gold is down 0.29%. So it could be a green day today. We shall see. I'm not really sure, guys. Anyways, guys, thank you so much for tuning into today's portfolio update. It's pretty straightforward, I know, but I just wanted to keep it focused and explain what my plan is moving forward with my portfolio, with my positions, and what some of the news and things are looking like. But really quick, I have a question, guys. I've kind of asked this a little bit more, and I know that I am too invested into tech right now. Now, I know the risk of these leverage funds very well. I previously experienced that firsthand. But I believe that with my QDTE position, my Chippy position, my KQQQ position, they are kind of putting me in a better spot to hedge against if these other positions, these leverage funds, were to move to the downside. However, I am looking for other funds, other positions, preferably in different industries. But if I can get an S&P 500 fund, like I mentioned earlier, as well as maybe some funds For instance, I've been looking at GX, which is a global one. It hasn't performed as well as I would like in terms of beating the S&P 500, but I believe it'll hedge my portfolio against the downside for some of my other stronger positions. But again, that's also why I am capping these at 10%. I don't want them to outweigh my portfolio as a whole. So if you guys have any suggestions, questions, comments, or feedback, drop them down below. And most importantly, if you are new here and haven't already, smash that subscribe button. It helps keep me motivated to continue making videos like these and documenting my journey. And last, but definitely not least, smash that like button for everyone else. It helps with the YouTube algorithm and growing this channel. So until next time, guys, peace.